Hello traders, Greg here with a market update. Okay, so overnight we did have some geopolitical risk event. That was the talks between the US in Iran in Geneva. Now post the talks we did get some headlines from the Iranian side, and they were very positive headlines, basically saying that the Iranians said that the talks were much better than the talks that they recently had in Oman, and that seems as if the next step is potentially drafting up some sort of agreement. So very positive headlines. But apparently there were still some sticking points that need to be sorted out. But the bottom line is that it seems as if diplomacy at the moment seems to be working. And no war is imminent. Having said that, the market that generally trades on this geopolitical news is crude, where we see the biggest moves. Crude was trading around about $64 before those headlines came out. Obviously, crude traders, have been scared that potentially the talks would break down, but they didn't. So crude dropped like a rock. It dropped from $64 down to 62. There's probably about a $5 war premium built into crude on the basis that risk that Iran and the US could go to war. So look, we haven't taken out that whole risk premium. Crude will probably stay, I'd imagine, above $60 for the time being. Because just the simple fact is that we still do have one of the biggest US basically war carriers that is on its way to just off the Middle East and should get there in the next week or so. So it is still a fluid situation, and until an actual agreement is reached and US warships actually sail back home, I'd imagine we will still have a war premium in crude. But anyway, yes, some positive headlines overnight in that geopolitical risk. Now, precious metals had a huge day and night yesterday. The volatility is still amazing what is happening in those markets. They were having a bad day before that geopolitical headlines came out, those positive headlines. But when they did come out, obviously that wasn't good for gold, which is a safe haven, and it dropped pretty much $100 post those headlines. So we had silver down about 5% of the day, and also gold down about 3% yesterday. Now, one of the reasons why we have seen a bit of selling, obviously in precious metals, there's two real big reasons. One is that it's Chinese New Year, and we have China out pretty much for the whole of this week. So China has been one of the biggest buyers of precious metals, and especially gold. So having China out, does take a big support from the precious metal market. The other thing is that there was a recent survey done by Bank of America about basically how market is positioned in all the different markets, and the biggest congested positioning, where it's the heaviest, is the market is heavy long gold. So when you get a market that is skewed heavily to one direction, obviously you are going to have big retracements to wash out a lot of those weaker positions, and so yes, seeing gold and silver having those sort of retracements as we saw overnight, largely also is due to positioning being so heavily skewed in one direction. Okay, yesterday also we did have some headlines in Japan with an ex-Bank of Japan board member who basically said that he does expect that the Bank of Japan will raise rates again in April. So the April meetings where he's looking at to take the policy rate up to 1%, which will be a new 30-year high again. And then he also believes that further out they will also adjust policy another time up to about 1.25%. So look, that is certainly yen positive. So I'd imagine it's the bias is still to buy yen. So any sort of rallies that you get in dollar yen is probably a good idea to get some short positions on dollar yen. And at some stage, especially probably in March next month, before we actually go into that April meeting, I'm sure that the market will actually start pricing that in, and potentially pricing that in aggressively, because obviously when the Bank of Japan hikes, it is a big deal. Okay, today what we do have a risk event that is the first meeting by the Reserve Bank of New Zealand. Look, market doesn't expect them any change in rates, so basically keeping the policy rate at 2.25%. The RBNZ has aggressively already eased. They went from peak rates of 5.5 all the way down to this 2.25%. So they've already taken off a good 325 basis points. So look, I'd imagine at this meeting we're going to probably see a hawkish hold, in that the RBNZ is pretty much now neutral rates, that the bar is set very, very high for the RBNZ to cut again. And if anything, the next move probably will be back up. Recently they did have food inflation jump up, food component to CPI is a good 20% of CPI, so potentially now that they are wary that maybe CPI is also based as well. So if it is a hawkish hold, I'd imagine that's probably going to be a positive for the Kiwi, so I certainly wouldn't be going short into this RBNZ meeting. Other than that, in US tonight, there's FOMC minutes from the last Fed meeting. That meeting, obviously, the Fed was on hold, but in the press conference, we learnt from Chairman Powell that literally there's no set path now for rates, that they're just taking it meeting for meeting. So look, I'd imagine that those minutes tonight probably are going to be a non-event, but potentially they might be slightly hawkish, in that they probably would have noted that the labour market has improved, and that's one of the reasons that they were cutting last year. So anyway, look, these markets still are pretty volatile, especially obviously precious metals. They are dangerous markets, but generally when we do get a big sell-off, the next day it's back up again. So maybe a cheeky long today. But anyway, good luck with the trades, and we'll check back in with you shortly.